We're about 90 minutes into trading. It is Wednesday, June 23rd. Hello, traders. Let's try and get right to it. Got a lot of material to cover, and I don't have a lot of time to do it in. Yesterday's pick, ETSY. Very, very nice video came out here. You can see stock closed higher than where the video came out. And here's the really nice thing is today it opened up with a bang. I still like that D1 daily chart. You can see how it's through that horizontal resistance. I still believe it's going to try and fill in that gap. We do want to see it above that 50-day moving average. It was not able to hold it. So I'm going to go into the S&P 500. We're going to take a look at the early action, bullish cross right here. Really mixed action. Lots of green and red candles mixed. That tells me the market is not going anywhere. Yesterday I pointed out to you a bullish divergence. We had this really nice 10P bullish cross in here. Everything looks good. Market rally, rally, rally. Uh-oh. Here we go. We've got a bearish cross. Time to be careful. But instead of pulling back dramatically, the market compressed. We had the 10P indicator falling, 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 and the market compressing. As I mentioned in yesterday's video, when the market does not follow what the 10P indicator is doing, that is a divergence, and it means that the next bullish cross is going to be a good one. So you draw your downward sloping trend line. There you've got a breach to the upside. You can also see the 10P indicator picking up momentum. Hello, really nice rally. I just warned everyone in the chat room that this was a bearish candle and a bearish setup, and that we have a bearish divergence forming. 10P indicator higher, 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 these deep troughs, and a bullish cross where the red solid line crosses the blue dotted line. That is a buy signal. Now we move higher, higher, higher. This is what we call a bullish cycle. But what happened to the market? Started to pull back. You can see how the market's been going down when the indicator's going up. That is a bearish divergence. That is a sign that a strong trend is intact. I believe that we're going to take out this low and the market's going to drift lower today. So be very, very careful. Now I want to zoom in. I'm going to show you my pick of the day. It's Tesla. I really like Tesla. Look at that. Right at the top of the list. So we've got a little bit of a cup and handle formation here off the low. That's beautiful. There's your lip. We're through the lip. Nice long green candle. We're also through the 50-day moving average. Stock has excellent relative strength. Now, I did trade this stock earlier today. I loved the volume. I preach it every single day. Relative strength, a numero uno on the list. Must have relative strength. Number two, must have volume. Number three, must have technical breakout. Every single stock that I show you in every one of my videos has these characteristics. Two long green candles closing on their high. Here you've got a candle right here that's been able to hold all of those long green candle gains right there, and then the stock pops a little bit higher to a new high of the day. That was a signal that we were going higher. Why? Because look what the market was doing. These are the first 15 minutes. Back and forth, chop back and forth, no action, nothing sustained. The clue to me was when we had a couple of long red candles right there and right there. What did the stock do? It held all of the gains that we'd had to that point. That told me that this was a pressure cooker. We had a bullish 10P cross right in here, even though we had these two red candles. So I felt pretty confident that the market was going to move higher. Market moves higher, stock lifts off. Now, as we get further into this formation right here, and I had mentioned this in the chat room and I drew a chart, you could see this long green candle right here. It held. And this little candle right here told me that there was more upside to the trade, and I did not bail on the trade because what was happening to the market at that exact same time. So let's count how many. This is the first 30 minutes of trading is that dotted line. So 1, 2, 3, 4, 5 bars in. We'll do the same thing here. 1, 2, 3, 4, 5 bars in. Now, this green candle right here. Those are big gains, and Tesla is a choppy stock. Right here, the fact that we were able to hold all of those gains on this red S&P bar told me that I needed to stay with that trade. I'm often asked, Pete, how do I know when to get out? I always seem to get out too early, and then the stock takes off. So here was my thinking. This is a very important lesson. You have a long red candle right in here. The stock is able to hold all of the gains and hold that high right there. Now, I didn't know if the market was going to continue to pull back, and I was in the middle of a really nice bullish 10p cycle. So it had a lot of room to go to the upside, and I wanted to give it all the room that it possibly could have. So right in here, I'm thinking, well, one bearish bar is not enough to get me to bail out of this position, and the stock is still showing excellent strength. But here's another red bar. That's not good. I'm getting a little bit concerned with the position after this second red bar, but what did the stock do? Boom, it moved higher. Now we get into the next red bar. Now I've got 3 consecutive red bars, and we are moving well off of the high of the day. Notice that the high of the day was also yesterday's high, so we have resistance building here. Now we've got 3 red candles, and I've moved considerably off the high of the day. That tells me that this is not just a 1 bar pullback or a 2 bar pullback. These are pretty significant bars, and we're well off the high. If it had been tiny little red bar, tiny little red bar, those could easily be reversed and then blam, right through to the high of the day. And I'm in a stock that's got great relative strength. So I'm willing to hang on, but after this third red bar right here, nope, I'm taking gains. This time, and it doesn't happen often, I was able to get out on the high of the day. I still like Tesla, but I want to show you how important it is to always have a chart of the S&P 500 running, or SPY. So I have this chart popped up, and it's tucked behind my primary chart. And now you can see, just as I'd mentioned, that was a bearish candle. Now we're through the low of the day. Now we got a bearish 10p cross. You cannot get long until we have a bullish cross. And even then, because we had a bearish divergence, that usually means that we've got to go through a full cycle. So we got to go through the bullish cross, and then the bearish cross, and then the next bullish cross until we have the possibility for a good buying opportunity. Those bearish divergence and bullish divergence, they last for a long time, and they signal trend strength. So be very careful right now. We're, again, 90 minutes into trading. This would be a time, if you are a long only trader, meaning you only take bullish positions and you only want to trade from the long side, this is a time when you want to be in cash. You want to be waiting for the market to find support. You want to be watching for those stocks that pull back, that have relative strength. So you would go into a search like relative strength 30. These stocks are strong over the last 30 minutes. Market has been weak over the last 30 minutes. So now you want to go in and you want to compare. What is Goldman Sachs doing relative to the market? Market down, Goldman Sachs going higher at the high of the day. Put up the daily chart. Trying to get through the 50-day moving average. If I have market support and I have Goldman Sachs above that 50-day moving average, I'm buying. Federal Express. Aha! Holding the 50-day moving average, trying to break through the 50-day moving average. Put up the 5-minute chart. Okay, it's holding its own. The market's pulling back. The stock has been able to inch higher. This stock is probably going to move higher. SAVA, glad I brought it up. Yes, strong relative to the market on a 30-minute basis. Would I buy it? No. No, no, no. Relative strength alone does not mean anything. Number one, we don't have the volume. That's the volume you want to see. That's the volume that you saw yesterday at SAVA. So you don't have the volume. The stock has been relatively weak to the market all day. Look at this reversal. Gaps higher, reverses the whole day. No, I do not want to be picking bottoms here, and I do not want to be trading this to the upside. I want strength. Barry Sanders on the 50-yard line with no one in front of him with the ball. That's what I want. I don't have that in this stock. Goldman Sachs, yeah, I've got a pretty clean path because we're through the prior day's high. There's the prior day's high, actually the high from 2 days ago through the prior day's high. Yes, this stock has a chance to run a bit. So make sure that you have very little overhead resistance. You've got a little bit of resistance here at the high of the day for FedEx, but apart from that, it has a chance to run. So it's got to get through that resistance level. But yes, FedEx looks pretty good. Let's go into heavy buying and click through a couple of charts and let's see what we can find. Are going to be looking for stocks that are ticking higher when the market is down. And that's all I'm going to be doing. Roku has been really good. We're going to find one in here, just a matter of time. And when we do, you're going to know that this would set up to be a really good trading opportunity. Unfortunately, my recording software is interfering with my trading platform, so I'm going to call it a day. That is how you trade relative strength. Very, very easy concept. You have to have that S&P 500 chart in front of you. You have to watch what the stock is doing tick for tick with the overall market. Those are your clues that you need to pick up on. Do I always use this method to exit a trade? No, but I use it very, very often. Sometimes the market is super strong and the stock is showing me that it's weak relative to the market, and then I exit the trade based on stock price patterns. It could be a breach of the 8 EMA. It could be a breach of a halfway point on a long green candle like this. I would exit right in here because I want to see half of that preserved. There are a number of other techniques I use, but I wanted to show you how important it is to always keep an eye on what's going on with the overall market. Good luck with your trading. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.